Hello, ladies and gentlemen, and welcome to today's chart scan trading lesson. My name is Andy Jordan. Today is Monday, February 22nd, and last week Marco talked about when is the best time to trade the euro against the dollar, and he explained very well. Um, when is the best time to trade these kinds of markets regarding liquidity. Today I want to look into, well, it sounds almost the same topic, but it's very different. I want to look into when is a time we should not trade, or let's say at least when I'm not trading. So let's have a look in on my table here, and as you can see, I got a couple of points where I think it's important when not to trade. Um, well, in general, I do not like to put on any day trade, any short-term trade, 15 minutes before any report comes out. Um, I will go into this topic a little bit more in detail in just a minute. Let's go quickly to the rest of the list here. I do not like to trade on trading days with important reports are coming out. What's an important report? Well, for me, when the Fed, for example, is talking about interest rates, um, FOMC market minutes, for example, always coming out at 1 o'clock in the afternoon, Chicago time. And I just found out on these days, for me, it's just better to do nothing, just to stay out of the markets, because what happens is before the reports are coming out or before the announcements are coming out, nothing is going on, and markets are very often just choppy. They stop me into the trade, and then nothing happens. So I'm not doing so well, and for me, it's well simpler, just better to stay out on these days. Well, I'm definitely not trading on US holidays because I'm trading US markets. When you trade some different kinds of markets, of course, then you have to check up which holidays are important for you. I don't like on holidays, but I also do not like to trade on days between holidays. Let's say Thursday is a holiday, then we have Friday, almost normal trading day, and then we have Saturday, we have weekend. So I do not like to trade on these, what is called in English, bridge days. I would not like to trade on Friday because very often traders are gone and markets are not liquid enough and are very choppy. And well, I definitely do not like to trade between Christmas and New Year. It always has been a very difficult time for me. I know that very it's very difficult for traders to say, okay, I'm taking the day off, because very often we feel some kind of useless on these days, and because of natural reason, we want to do something, we want to produce something. But keep in mind that not trading on a specific day, it's part of the trading job, and it's important. It's you cannot put it into the same level. It's not doing anything. It's more like it's very important in trading to say, okay, today I'm not going to switch on my real time because I know there is a chance too high I'm screwing up. It's better I'm not doing anything. Okay, so let's have a look into why I do not like to trade 15 minutes before a report. And I want to show you, for just an example, last Friday, Friday the 19th February, there, well, at 7:30 Chicago time, we had a bunch of reports coming out. You can see a couple of reports regarding the Canadian dollar, regarding what's going on in Canada, but also important reports in the US. And I want to have a look into the euro just to show you what I mean, what makes it so difficult for me to trade. Um, this is what you can see what happened during the last 15 minutes before 7:30, and you can see, well, it's not, liquidity is not really very good, And now let's have a look into the next bar, and you can see, well, this is not the 7:30 bar, it's the 7:29 bar. So 1 minute before the report came out, they already started to move the market here strongly to the downside. And even more impressive, what's happened at 7:30 is, well, this huge move. Well, of course, maybe you got lucky and you went short here, but as you can see, it's a huge move here to the downside. We are talking about $400, and I'm not sure, even being on the right side, it was able to make some money, or enough money to really to take this risk uh, at 7:30. So what I always do is, let's say I'm already in this trade, maybe I got in this trade already at 7. Um, when the market is not moving my way and I'm not in profit, I'm just getting out 5 minutes before the report is coming out. I'm out of the trade. Or maybe I'm already in positive territory, then I'm cashing in on my first lot, and I hope that maybe the rest will also make me some nice profits, and I stay with a couple of contracts in the trade. But in general, I'm not getting into any new trade 50 minutes before any important report. All right, guys. Hopefully, it was an interesting lesson for you. Um, Talk to you next week, and we'll have all a great trading week. Bye bye, everyone.